FOMC report live. What a volatile, explosive day we have lined up for you today. It's going to get very, very exciting here on the show. We're going to cover the FOMC report live. Is this the last event with Jerome Powell? We've got controversy with Trump. We've got the war going on. We've got all sorts of stuff happening live right now. The markets are going to be volatile. Tomorrow, I'm doing my 60 minutes interview. You won't want to miss that. I've beaten the market. I've beaten hedge funds for 3 years in a row, Warren Buffett, and now they want to interview me. Tomorrow, we're going to be interviewed live, unedited, unscripted. I demanded that, and also be live, not recorded, happen live. Join me tomorrow for that, but right now, it's time for the FOMC report. Right after that, we got the Google earnings. It's going to be an explosive night. We're going to cover everything live. We've just done a $250,000 trade, beaten the market again. We're ready to buy. Be careful. I warned you of Hood. I warned you of SoFi. Tonight, we've got all the biggest companies in the world reporting. We're covering Google. We're covering Amazon. And we might have a little surprise for you in a minute. That's coming up right after this. Click share, click like, get busy. Don't just sit there. Get busy with the fizzy. I'll see you right back after this. If you're watching later, you can skip this. It's showtime. Jerome Powell, enter the stage. Here we go. Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. What an incredibly volatile day this is. One of the most anticipated FOMC reports in history. Jerome Powell is being pushed out now. It's his end of his term, but will he be going? Trump wants him out immediately. The court case is rattling on. Kevin Hirsch being voted in, but can't take the seat because of the issues we've got around the court case for overspending or overreaching, if you will, with the Federal Reserve building and projects. All of that uncertainty, markets literally bouncing up and down. We've got Coca-Cola behaving like a meme stock today, all over the place. I took $250,000 from it yesterday. I bought the bottom and I managed to sell the top. Once again, beating the market now consistently 3 years in a row, beating all hedge funds, beating all S&P indices, beating Warren Buffett, Berkshire Hathaway, and tomorrow I'm doing a 60 minutes interview tomorrow, unscripted, unedited, live, challenging all of my claims that I've beaten the market. Join me for that live event tomorrow. That is the main event tomorrow. No opening bell, no closing bell. It'll all be on that 60-minute interview tomorrow. Going to be a big one tomorrow. Hopefully you'll all join me for that as I'm challenged and questioned over my claims. I'm very happy to do it because I am always winning. I am always beating the market, and tomorrow it'll all be there for you. What an amazing day that will be. All right, so the markets are down today. Let's go through where we are. We've got the announcement coming up shortly. We're going to be live, of course, for it. Then that will not be the moment. We expect it to be a pause. What's important today is what Jerome Powell says and the tone. And we might have a special guest coming up later on as well. So let's go through the markets. And before we do, though, I think we should do some work. I think we should get busy with the fizzy. I think we should get everyone to tap the like button and share this out. What do you reckon? Should we do that? Should we get everyone to do that? I think we should. Before we show you the markets, this is going to be a massive afternoon, so let's do it. If you want to join me on Discord, there's Discord. There are no places available today at all. It's only 2 a day. We are now very limited on Discord. One-on-one service with me, no AI, no bots, no inflation, no price increases, no never-ending coupon codes. It's always just a couple of bucks. It's always 90% off. It'll never go up in price, same as my memberships. If you want direct access to me, it's the only way you can. People offer me 30, 40 and 50 grand now, sponsorship deals every single day, and you can't sponsor this channel. There's no way you can. You can offer me $1 million, makes no difference. So if you want to speak to me and you want to get my trades 24/7, if you want to access our newsletter, our training course, all of that can be done through Discord now. It's incredible. One-on-one service with myself and Sensei. Will do stage shows for you as well. All included there in the Discord. A couple of bucks a month, the most inexpensive Discord server on the planet. We want to be the best server. I'm not interested in just making money. I make money investing. We want to be the best server and the best YouTube channel in the world, and the first one to 1 billion. So 1 billion subscribers, that is. So please tap the like button and consider subscribing. So before we start, before we bring you all the news, before we go to Q&A and answer all the questions, let's get how many are watching right now? We just started out. There's 249. Let's get 100 likes in 1 minute. Are you ready? Bring it up on the screen. Let's have some fun with it, shall we? Let's refresh it. Let's go. 100 likes in 1 minute. Are you ready? In 5, 4, 3, 2, 1. Let's go. Here we go. And we're starting off. Let me refresh on the screen and show me how many we got. We are starting off with 10 likes. Everyone's bloody asleep. Let's refresh the screen. Let's get it done. 100 likes. We'll bring you all the news, all the facts. Going to be live with, there we go, straight away, 43. Boom. That's more like it. Everybody waking up. Let's get to it. Very exciting day today. We're about to hit another milestone on the channel. We're coming up to 10,000 live stream, 10,000 videos. Just a day away, I think, from 10,000 videos and 113,000 subscribers. Millions and millions of views. Right, here we go. Let's get it done. In 1 minute, I'm going to count it down. 43. Let's get it done. What are we at now? Let's have a quick look. We are now at 76. 3/4 of the way there. 3/4 of the way there. I want to end this, get straight onto it. Let's refresh it in 5, 4, 3, 2, 1. 100 likes. Let's get straight. Now we're suggested on YouTube. That's what it's all about. YouTube earnings tonight, by the way. Google earnings, we're covering it. 85 likes. There you go. Come on, everybody. Boom. Let's refresh it again. One last time. One last push. Then we get recommended. 87 likes. Once we get to 100, YouTube will share this out as a suggested video and we'll be off to the races with the FOMC report. No one covers it in the way we cover it. Nobody wants to, probably. I think it's bloody mental. That's fine. It is mental. You got to be mental, right? This is the mental club. I love it. 94 likes. God, we're so close. 94 likes. Come on, guys. You can do it. Okay, we're going to count it down. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Let's refresh it. Do we get a big cheer? Do we get a big cheer? We get a big cheer. 100. Exactly. 100 likes. And let's cheer. Go. Woo-hoo! Lovely stuff. Bloody marvellous. All right. Great stuff. We're off to the races. And we're in for one hell of an afternoon. I can't wait. I absolutely love winning, love making money, and you really can't lose today.
I can't believe this.
That's the problem. You can. Oh,
and
special
William
guest.
Myers 333 has become a member. Best damn channel in the planet. Hit the like, come on, lazy people.
I love it. William Myers is #1, by the way, on X. William Myers, for 3 years, has liked and shared and reposted every single short on X. And that's amazing because they come out every half an hour, 24 hours a day. Forever. We're always creating content, always putting it out. No AI, no bots, nobody in my studio, just me. I do all the edits, all the work, all the I use scheduling, obviously, because I'm asleep, but yeah, all my own work. No team, no firing it off to somebody on Fiverr for $1 a week in India or whatever. We do all the work, just me, my team. They all broadcast their own stuff. It's fantastic. I'm very proud of that. It's the way it has to be on this channel. Right. We are just half an hour away. If you want to talk on the show, do a super chat. It shares it out on the screen. It will read out your comment. As long as you don't swear, it will bring out any comment. Just don't be rude. It will bring out any comment on the screen. Here we go.
A Defense 89 tipped $2 through super chat. Oh, super chats are back?
Super chats are back. Yes, they're working again. They always work. Whenever you super chat me, it always works. You see it in the chat. It credits the channel. Sometimes it doesn't display on the screen. Very rarely, but that's what's happened. That's what happened yesterday. But no, we're all good again now. So defense, yes, anyone could say a comment. Give me your predictions. Give me your predictions. Right, I have got some breaking news for you. Yep, you're going to get excited now. I told you we might have a special guest. I told you we might have some good stuff. We got some good stuff. We have got an award. Did you know this? That we have an award-winning newsletter. Did you know this? #2 on Substack, bestseller. The owner of the newsletter, who's teamed up with us on YouTube and on Discord, is Sensei. You all love Sensei. His wife's has just had a baby, so they're very, very busy at the moment. But he's still getting the newsletter out. We have got a cheat sheet live today for the event. So, are you ready? I'm going to bring this all to you live right now. All the breaking news to prepare you for the FOMC, so you can trade it and make money. I always make money, and tomorrow I'll be interviewed. That 60-minute interview tomorrow, revealing everything, and you will see how I beat the market. So let's get ready to rumble. So if you want the newsletter, there it is in the chat. I've just dropped it in there for you. The first 5 people, did that give a link? Did that give a link? I'm going to make sure it gave a link. Let me just check it. Yes, it did. Yes, it did. There you go. There's the link. 25% off. Now, remember, if you are a Discordian, always check on Discord. We always give you the best deals on Discord. Always the best deals on Discord. If you want Discord, the link is pinned to the top. There it is. All my Discordians and members get the very best deal. Right now, 25% off all those in the chat right now for the newsletter. So here is your cheat sheet. Here is your information from our award-winning newsletter being brought to you right now, so you can benefit and trade this event FOMC and win. Right? And do you want to see how much I'm winning? Started with $5,000, never lost on a trade. Here it is. We are now at, there's the number, $713,000. Now, when it says all time for 14%, it's because I only started using this tracker a few weeks ago. All right. So, it doesn't show you the full growth, but nevertheless, $5,000 to $713,000. Not bad. I think you'll agree we've done well. And tomorrow I will be challenged and exposed within a 60-minute interview that I have beaten every indices for the last 3 years, every trade, beaten Buffett, beaten everyone. A major event tomorrow. You won't want to miss it. And right after tonight's show, of course, we have got the Google earnings. How can you afford to miss this one? I'm so excited. You like this? And of course, it's my boss, Google earnings. That's coming up straight after this. There's the Google earnings. Boom. And we have our very special presentation. Here it is. Google is all ready to go with our very special presentation coming up for you straight after this, the Google earnings. We're going to be there live for it. But right now, we have got our cheat sheet from the newsletter. Google comes next, and Amazon. That's being done with Vaz, of course, from the analyst room. You don't want to miss that. A lot of our members watch both at the same time because they like to support the channel. And I don't know how they kind of understand it all, but there you go. That's what some people do. Right. So here we go. We haven't got a second to waste. The FOMC is just around the corner. We need to cover it. Here is the cheat sheet. Let's go. No more messing around. We're now making money. All right. Make sure you tap the like button. Make sure you subscribe. Let's get into it. So I've only got half an hour to get through all this news on the cheat sheet. This is ready from our newsletter. If you want it, the link is in the chat. It's below every video. Best deals always, forever on Discord. Why this one is different. 3 things separate tonight's FOMC that we've covered. It's almost certainly Powell's last press conference as the chair. His term expires May 15th. He may stay on as a regular voting governor through 2028, but the gavel passes either way. There's no SEP, no dot plot. April is not a projections meeting. We get a statement at vote tally and a press conference. Every word in the statement carries more weight tonight because there are no fresh forecasts to argue over. The Warsh handover is now scheduled, not theoretical. The Senate Banking Committee voted 13-11 along party lines this morning to advance Kevin Warsh after Tillis dropped his block over the weekend when Powell investigation was closed. Done. It's happening. Breaking news. It's out. Powell is out. Warsh is in. You've just read it from the newsletter. It is out. Okay, so let's get straight into it. Volatility usually arrives in 2 waves. Now, you might want to follow along with the cheat sheet if you've got the newsletter itself. You can follow along, okay? So you might want to follow along with our newsletter as I'm bringing it to you. So the backdrop, inflation hot. Now, you might want to go and open this up as I read it out to you to get more information, right? The backdrop, inflation is hot. Growth is soft, oil on fire, literally, and the Fed is stuck, completely stuck. If you want to go and open that chart up, you can as I read it through for you, okay, in the newsletter. If you want the newsletter, there it is in the chat. 25% off the first 5 people. Always check on Discord for the best deal for my Discordians and Electra members. All right. PPI near 4%, half an hour to go. I've got to get through all this really quickly. Year on year, CPI at 3.3%. Year on year in March, the highest since May 2024. The Cleveland Fed nowcast has April CPI jumping again to 3.56. Core PCE February at 3%, running 100 basis points over target. US gas at $4.80 a gallon, the highest since August 2022. Less than one cut priced for 2026. A complete reversal from the 3+ cuts the market had penciled in pre-war. So underneath the headlines, the Q4 GDP printed 0.5%. The Atlanta Fed Q1 nowcast is 1.2%. February payrolls were 133,000. March bounced to 178,000, but most of that was healthcare workers returning from their Kaiser strike. The Dallas Fed thinks the break-even payroll number is now near zero because of immigration declines. That tension is the whole story. So starting off then with the oil picture, we have got an explosive FOMC report today, which we're going to bring to you. So pay close attention. There's a newsletter if you want to follow along. We've prepared it all for you. Consider tapping the like button and subscribe to our channel. We aim to be the best, most honest, real channel in the world. I only want that. I'm not interested in the money I make from YouTube. I make money from investing. I always win. Tomorrow, my interview, 60 minutes. You don't want to miss it. The oil picture and why it's bigger today. WTI at $107 a barrel. Brent above $111 a barrel. I'm getting breaking news coming in all the time from my CEOs, people that I speak to all the time. I'll be bringing it to you as I get it clarified. Both jumped sharply today on Trump rejecting Iran's latest Hormuz proposal, not hummus. You don't eat this stuff. Some people did today. Anyway, proposal Tuesday, and the UAE announcing it's leaving OPEC next month. We're now in week 9 of effective Hormuz closure. Trump said few weeks, 2 weeks, 3, 4 weeks, it'd be over. It's now nearly over 2 months. Inflation's guaranteed, recession virtually guaranteed, carry trade 95% guaranteed. That's why we took profit. That's why we're always winning. We don't just believe for the sake of it. All right. Okay. We're now in week 9 of an effective Hormuz closure. Around 20% of global oil supply still off the table. Every $10 move in oil maps to roughly 0.4% on inflation and negative 0.15 on GDP. The April CPI now cast at 3.56% already prices in a chunk of this. If Brent stays If Brent stays bid above $110 through Q2, the next 2 prints get worse, not better. Be very careful buying anything today. I'm not doing it. I've explained this over and over again. I'm going to zoom out just a little bit. It's a little bit too tight for you, right? Powell's framework on supply shocks is to look through them. Prices rise once growth absorbs the hit. The Fed doesn't have to react. That works for a one-off. It breaks when the shock stack, tariffs in goods, oil and energy, Hormuz closed, OPEC fragmenting. In March, he tied elevated inflation readings to tariffs and committed to keeping inflation expectations anchored. The implicit warning was that you can't keep stacked shocks transitory forever. I've spoke about that a lot on the show. At some point, they stop looking like shocks and start looking like a regime. We've got 26 minutes to go before the announcement. We're going to cover it all for you live. We might have a special guest. If you want the newsletter, this is the cheat sheet to prepare for it. You can 25% off. If you're a Discordian, there's a deal running right now. The best deals, of course, for our Discord and Electra members on YouTube. Tonight is the test of whether he extends that thinking from tariffs to oil. 6 weeks ago, the war was 3 weeks old. Easy to dismiss. Now we're 9 weeks in and oil just jumped again. If he holds a transitory line, that's a calming for risk. If he layers oil onto March's tariff warning, that's the 1970s playbook creeping into the language. It is, and I've said it over and over again, I don't think how we can avoid now a recession. I don't know how we can avoid inflation returning and a carry trade unwind. I don't see how it's avoidable. It was every analyst in the world said if we were out of the war in the next week or so, and that was like 4 weeks ago, we may just avoid it. Every analyst. Anyway, so a word on stagflation for you now. Powell hates the term. He hates it. In March, he said again, he'd reserve it for a much more serious set of circumstances. Most of the audience will hear him reject it again today and assume the situation is fine. It isn't. Stagflation, in plain English, is three things at once: slowing or stagnant growth, persistent elevated inflation, and rising unemployment. So let's break that down. What makes it so bad is that the Fed's tools point to opposite directions. To support growth and jobs, you cut to fight inflation. You hike, you can't do both. So policy gets stuck. The 1970s is the textbook case because oil shocks kept prices high while growth weakened. If you've just tuned in, please do tap the like button and consider subscribing to our service here on YouTube. We aim to be the best, most honest, real YouTube channel in the world. Later on, we do have our Google earnings. We're covering it live. You won't want to miss our Google earnings. It's going to be a massive event tonight. At the same time, Amazon. That's right. Same channel, 2 earnings at the same time. You might want to see how we pull that off. It's pretty exciting to watch. There we go. That's tonight. If you want the newsletter, there is a newsletter. Don't forget to check Discord. We have no places available today. Completely done. We only have 2 a day now. We cannot let too many people on the server because we want to provide the best service in the world. No discounts, always 90% off, always a couple of bucks, no inflation, no price increases, and we're always providing more service. I make money from investing. I don't make money out of my services. Very, very important to understand. You may also like to know, I've just gone viral on Instagram and X because of our interview tomorrow. If you see some of the videos, they've gone viral. Watch me on X and Instagram. I've given you the links. And don't forget, all the links are below every single video as well. Join me tomorrow for that interview. Only one thing happening tomorrow, my interview. So here we go. What we have right now isn't textbook stagflation. Growth is slow, not contracting. Q4 GDP, we've got a plus of 0.5%. Q1 now casts a plus 1.2%. Inflation is elevated, not runway. CPI 3.3%. Core PCE. Thank you very much, R4, for your subscription. Thank you so much indeed. We're about to hit a big milestone today, and also 10,000 videos, 10,000 live events. We're just about to hit it. It's amazing, right? In 4 years, I don't think anyone's done that in 4 years. It's like crazy. We're live up to 12 hours a day. So we're in milder territory right now than the 70s on all 3 counts. Powell is technically correct to refuse the word. Yes, he's right. There's a lot of good in the market, but there's a lot of uncertainty and unpredictable movement as well. So be careful. There's a reason why I never lose on my trades. So please be careful. Another member, Ahmed, thank you so much for your subscription. The trajectory is what we worry about, though. It's what should worry you. I want to thank you for your subscription. Growth is decelerating. 3.1 now cast at 1.2%. Inflation is accelerating. 3.3% headline to 3.56 April now cast. Break-even payrolls have collapsed to near zero. It doesn't qualify as the 70s in scale, but it's the same shape of problem Powell would have to address, and the same problem his successor will inherit. The word he uses tonight and this afternoon, depending on where you're watching, matters because it matters less than whether he describes the combination openly. It's all about the tone as well. The 5 things that matter most. If If you want the newsletter, there is the link, 25% off. I've just been told there are only 2 places left on that discount. We are limited all the time. Everything that we do always sells out. So there are only 2 places left on that link. It was only the first 5 and the first 3 have gone. Just 2 left. On Discord, always check for the best deals. My members always get the very best deals. Okay, so 5 things that matter most. Does somewhat survive in the inflation sentence? March said inflation remains somewhat elevated. If somewhat gets dropped, the one word change tells us the Fed is no longer confident. The inflation overshoot is contained. Watch this first. So pay very close attention to that. All right. Number 2, these are the things that you've got to look out for tonight. All right. We're giving them to you so you can trade effectively and you can win. We bring you the most honest news so our members, our viewers can win. I always win on my trades. You've seen me do it. You too can do the same. So it's not hard to make money. In fact, it's bloody easy. You've got all the tools there for you. Just stop losing. Protect your money is more important than trying to make it. Number 2, does the forward guidance still say additional adjustments? That phrase implies the next move. Thank you, Eric Adams, for joining our channel. That's very kind of you. The next move is down. If it changes to anything, two-way hike optionality is officially live. Single most important sentence in the statement. Number 3, how does the Fed describe the Iran war? In March said the implications of developments in the Middle East of the US economy are uncertain. If that hardens with explicit energy or upside inflation language, the Fed is admitting the war is structurally inflationary, not just a passing event. That's a very, very important one. Number 4, 2 to go. Please tap the like button, be part of our family, and consider subscribing. Everything that we do here is live, unedited, unscripted as it happens. Number 4. We are now just 19 minutes away from the announcement, but that's not the important thing. We all expect a pause. It's the tone of Powell. Wait for that. So Powell's tone on the oil shock, best case. He calls it a tax on consumers. That weighs on growth. Something the Fed can look through. Worst case, 1970s parallels, inflation expectations language, reference to the layered tariff plus oil supply shock. The 1970s reference is the nuclear option. And finally, number 5, will Powell stay on as governor after May 15th? If Walsh comes in and pushes for cuts, Powell remaining as a dissenting governor would essentially make him a shadow chair through 2028. It'll probably defer the... Oh, we got a star guest. Let's stop the show. Star guest, let me read this. Jacko, thank you. What have we got here?
Adjiko Vallejo tipped MX $100 through Super Chat. 100% newsletter recommendation.
Thank you so much indeed. Everyone can have their say. No one gets left behind. We have live phone-ins. Everyone can call in. Everyone gets mentioned. Everyone can be on the screen. You can share your comments. I don't hide it. Nothing's filtered. As long as you don't swear, of course. It can appear on the screen for you. All right. So here we go. So he'll probably defer. Thank you, Quang, for your subscription. The question tonight, this afternoon, wherever you're watching in. Wherever you're watching this, the way he defers is the read. Does he leave the door open, or does he sound like someone preparing to leave? Okay. Now then, we've got a chart for you. This is for you to open for yourself. If you are reading the newsletter right now, there is the link. I'm told only one person left now, one place left to get the 25% discount. Those on Discord and members, you always get the best deals. Look in Discord as well. You can open up this newsletter and you can see for yourself. We've provided you a chart so you can trade effectively. We've got a star guest on the show. Let me bring this in. Just one moment.
At TH1 Suede 3th Gaming tipped $2 through Super Chat. Discord Pro very worth it.
Thank you very much indeed. Yes, this will be, I'm sure, a challenging question tomorrow in my 60-minute interview. We have a Discord server. I want it to be the best. And we've looked at the competition. Some of the competition, people that are scamming people, awful. There's a guy just down the road from me in Dallas that charges $2,000 to custodian your money, your XRP. And people are leaving, asking to join my server. The trouble is we only get 2 people permitted a day. And we've got a list of about 100 people wishing to join because it's all AI, it's all rubbish, it's all nonsense, it's all to make money. I only charge a couple of bucks for my service because I make real money. You've seen me go from 5,000 to 700,000 live on the show. No shorts, no options, no guessing, no gambling, by working hard and always winning and understanding the markets. That's why our Discord server is just a couple of bucks, and that gives you direct access to me, the only way you can message me. There's no AI, there's no trolls, there's no bots. Sensei comes in and does chart reading for you. You can also get access to the headlines for the news, and then if you want the full newsletter, you can get it, and a training course. All of that you can access with the best prices through Discord. I share my trades 24/7, so at 3 o'clock in the morning, if I'm on the phone to a CEO or a hedge fund manager, I talk to the banks, I talk to Ripple, and I make a trade, I share it with you. I even have a White House press room contact. I share it all with you live. That's why I always win. That's why my Discordians always win. In the chat now, fact check me ahead of my 60 minutes interview. In the chat right now, fact check me. My Discordians, have all my trades been winning? Have I always got it right on my predictions? Do I always go live for you? Do I share all my trades with you? Are you also winning with my trades? Say yes in the chat or say no, Martyn's a liar, a bloody scammer. He makes it all up. Put in the chat. Judge me in front of the world. Nothing is edited, scripted. Nothing is taken out. Please give your yeses or nos to that statement. So let's move on. So on jobs. March said, hang on, I've got another guest.
At Rallo.1 tip $2 through Super Chat. Most honest channel in the world. Get pro.
Thank you so much. That's very kind of you. Most people are pro, actually. It's a couple of bucks more. And then you have my 24-hour, 7-day-a-week trades and direct access with me and direct one-on-one service. Yeah, it's ridiculous. People charge $1,000 and use AI, for God's sake. I do it for a couple of bucks. That's why it's limited. We can't let everybody on. It's just impossible, right? So March said, let's get straight to it. March said the jobs gains have remained low and the unemployment rate has been little changed with March payrolls at 178,000 and unemployment ticking down 10 minutes ago for the rate decision to 4.3%. The Fed could upgrade this slightly. They probably won't because the underlying picture is weaker than the headline. So on the dissent count, March was 11-1, with Miran alone wanting a cut. January was 10-2, Miran plus Waller. The way to read tonight, this afternoon, wherever you're watching around the world, depends on the direction of any new dissent. If a second dovish dissent shows up, somebody else wanting a cut, that's actually the calmer outcome. It means more committee members see growth weakness. Amar, thank you very much for your subscription, as a reason to ease, and the cut narrative for 2026 stays alive. The bigger problem is if Miran... Oh, we got another special guest. Let's read this. Thank you.
At Defense 89 tip $2 Canadian through Super Chat. 100% worth it. Have to hear his Spin the Wheel song.
Spin the wheel. Yeah, we still got some spin the wheel stuff. And we're also giving away Luca coins as well. Our own Luca coins, which you can claim for free merchandise. You can claim for trips with Vaz behind the scenes to the air shows, to fly on the EVTOLs. We got so many great things to give to people. It's ridiculous, isn't it, really? Thank you very much for that super chat. It's very kind of you. Okay, let's get to it. So the way to read, did I just do that? Yes, I read that. The bigger problem is if Martyn is alone again and the hawkish descent appears alongside him. Somebody wanting a hike. That tells us the inflation hawks are getting louder under the surface, even as Powell holds the mediation together. Hawkish descent on a hold meeting is a tape mover. It certainly is. The scenario playbook. Again, all this from our newsletter. The markets are trying to come up now. We've got 10 minutes to go. Don't chase. We only buy value here. We always win. If you want this full breakdown, I'm just going to let you open up your newsletter for further details on these charts so you can see them yourself. Please do that. So let's move on. We're nearly there, 10 minutes ago, and then we'll continue after the rate announcement into the FOMC. I will come to live Q&A as well. The base case is near copy-paste statement. It's a near copy-paste statement with one or two tweaks. I have a star guest on the show. Getting ready for our big 60 minutes interview tomorrow. This is absolutely wonderful. So I'm going to break from this right now because I have a special guest in the channel with me, the editor and owner of our award-winning newsletter. I want everyone to blow up the chat, show some love. You might want to support the nappy appeal or the diapers appeal, especially on my show because I get the money. But I'll give Sensei some. All right, so if... He's got enough money. Okay. Right, we've got Sensei live on the chat. He has told me he is actually running out of nappies, so you might want to give generously. Anyway, show some love for Sensei. He's here with his award-winning newsletter, taking a little moment in between the baby going, meh. That's a very good impression. Do you like it? Shall I do it again? Sensei's baby sounds like this. Meh. Like that. And the first word he's going to say ain't mummy, ain't daddy, it's Martyn. It's Martyn, because every time Sensei calls me up, I'm on the phone and I go, hey, little Sensei, Martyn. It's all he's heard that more than anything else, and tap the like button as well. I love it. So anyway, here he is. Give him a great warm welcome. Sensei live on the show. How are you, mate?
I'm doing well. Thanks for having me on.
Absolute pleasure. How could we not have you on an FOMC report? Absolutely great to have you here. So, Sensei, what have you got for us, mate? And congratulations on the baby. Everyone blow up the chat. Like 2 weeks old now, right? Somewhere like around there.
Yeah, exactly. I think exactly 2 weeks. So yeah, but baby's here. Spent a few extra nights in the hospital than we would have liked, but thankfully everyone's healthy, everyone's safe, and I'm ready to be back. So you'll hopefully see more of me next week. The newsletters have been running in the background. So hopefully everyone's kept up to date with all the news every single morning, and I've heard a lot of people are taking advantage of the chart training course and all of that sort of stuff. But today is FOMC day. 8 minutes ago, Jerome Powell's essentially most likely last event. We're pretty certain on that. The vote went through for Walsh this morning. So new Fed chair, new FOMC next month, I think is the next one. So that's going to be interesting. New person to cover. Are we going to miss Jerome Powell or not? I'm going to miss he's a little bit cute, isn't he? I'm going to miss him coming.
You
on
always
the
say
stage
that. What is that? What is that with you and what is it with you and Jerome Powell's a little cute?
Man.
What?
He's just a little old man. He comes out, he says good afternoon, and the markets go crazy.
He's a little old man. Is that what he is?
Yeah. Did you see him next to Trump? Remember that little clip I like? Yeah. Trump taps him on the back and he looks like he's going to fall over.
Yeah, I remember. He went... I love it. So, Sensei, we've got 8 minutes to go. 7 minutes to go now. What have you got for me, mate?
Yeah, so we're gonna break it down as it comes out. As you were reading from the newsletter there, obviously there's more information in that cheat sheet that we're not going to share with everyone, but the premium members are hopefully all ready for it. We're going to have a breakdown after as well for the newsletter, but the main things I'm looking out for are really, what is he going to say about inflation? Is he going to drop the somewhat elevated and actually say inflation's a genuine problem now? Remember, they said inflation is no longer a problem. They were focusing on jobs, and then they said jobs is no longer a problem. And then we were anticipating many rate cuts this year, and then the war came around. Inflation was already slightly creeping up before the war. And now we've got the war. We went from anticipating the market went from anticipating 3, 4, 5 rate cuts. We were both on board with one, maybe 2 rate cuts this year. And the market's now also pricing in 1 rate cut. So we want to see what he says about inflation. Is he going to be a bit more bearish with it? Is he going to say it's somewhat elevated, or is he going to say it's a real problem? Now they've had a bit more time to digest the Iran war. It was very raw when that began. We've got some inflation prints, and obviously we know inflation went a bit crazy. We've got another inflation print tomorrow I'm hoping to cover. So we want to see what he says about inflation and how much of an effect this war is going to have. Is it going to be a one-time hit, or is he going to start saying this is going to be a more of a major issue that he can't just brush it off as a one-time hit? He might need to change policy on it. The other big thing that we're looking for is he going to mention anything about rate hikes? Because we did cover the FOMC minutes. Again, most people don't care about the minutes, but we get behind the scenes to that. And the last FOMC minutes, it seemed like many members, I think that the wording was several members, meaning probably 7 or 8 people, suggested that rate hikes should be spoken about. So let's see, is Jerome Powell even going to mention rate hikes? Because we could be at a point where we don't know what the next move is. Obviously, we know they're going to hold, but we might be at a point where it might be a cut, it might be a rate hike next time. Is Jerome Powell going to suggest that? Is he going to say, we don't know what the next decision is going to be, whether it's a hike or a cut? If he does say that, that will obviously be a little bit bearish for the markets. So yeah, I'm looking for what he says about inflation. I'm looking for his guidance about rate cuts or rate hikes coming next, because hikes could certainly be a possibility now with inflation. I'm looking for what he says about the Iran war. Is it going to be, last time they said they're uncertain about what it means for the economy. What's he going to say this time? Are they a bit more certain about what it means for the US economy? What's he going to say about the oil shock? Everyone thought the oil shock was over, and here we are today with oil going a bit crazy again, above 110. We were back below near $80 just last week, and now we're back above 110. So what's his tone going to be on that? What's he going to say about oil? And is he going to stay on as a governor? We know he's leaving on May the 15th. His term's finishing, and Walsh got voted in. But is he going to stay on as a governor? He probably won't answer the question. He might brush it off. But if he does, then he might be... the market will react to that because we don't know if he's going to choose to stay on as a governor. He might be essentially a shadow chair in the background, and people might listen to him more than Walsh. But a lot to unpack. We're not getting an SEP. We're not getting forecasts today. So the market's going to move on what Jerome Powell says. We know it's going to be a pause, so we're not going to be shocked by that. The statement's going to drop in 4 minutes. I'll be behind the scenes breaking that down, and then hopefully I'll be back on in a few minutes' time when that statement drops, and I can probably answer most of those questions that we have.
Thank you very much indeed, Sensei. As I got you on the screen, I just want to congratulate us both, me and you, as we prepare for the Google earnings as well tonight. That comes up later. That's a big one tonight. We've seen massive pivots in Google and YouTube recently. I just want to say, Sensei, I've just checked us on YouTube. We number 1 in the world for the FOMC report is Associated Press, as you'd expect. 3,500 watching. With CNN News, 1,600 watching, and in third place, Martyn Lucas Investor with me and you, mate. We are number 3 in the world on YouTube right now. That's absolutely great. I'm really excited about that. It's great to be back on top. In fact, we're nearly 1,000 watching now. We're going to overtake CNN News. How about that?
Yeah, brilliant.
It's pretty exciting. Sensei, you look great there in the shed. With the baby, are you spending more? Are you spending more time running to the shed? Just wondering.
Have you lost me? Can you hear me?
No, I can see you. I can hear you. With the baby being born.
Did you say am I spending more time running to the shed?
Yeah, you're in the shed right now. I'm just saying, are you spending more time hiding in the shed?
Oh, hiding in the shed. Yeah. Getting away from the baby crying. I want to be back ASAP as soon as my wife lets me.
She's not watching this, is she, by any chance? No, definitely not.
No, I told her I'm running out to the shed, and here I am in the shed. But,
here I am. Here you are in the shed. I absolutely bloody love it. Right, Sensei, what do you want to do? Are you gonna stay where you are, or call back, or what's the plan?
Yeah, I'm gonna stay where I am. I did want to let everyone know that there is, as you said, one spot left for the newsletter. So if anyone does want to get the newsletter, where you could have seen the cheat sheet, you could get prepared for these events. We're going to have an after event as well, where I tell you my thoughts on it. Obviously, you've got the chart training course, you've got the daily newsletter, the net worth tracker, all that sort of stuff is still running. Even though I'm away with the baby right now, I'll be back soon. The newsletter is still running in the background. So there is one spot with 25% off. The Discordians get a bit of a better discount if you want to go into Discord and grab that discount. But that's running right now. There is one spot available, and Martyn's gonna. I've seen you put the link in the chat, so I'll be here. I'll be ready to break it down. Let's see what he says, and I've told you what I'm looking for. So let's see. Last Jerome Powell statement and press conference. First, we get the statement in 1 minute, and then we get the point.
Okay, here we go. Ready to go. Stand by, Sensei. Thank you very much indeed. Here we go.
But the research out of Kansas City.
Now remember, folks, it's not the rate decision. We're all expecting a pause. It's the tone, so stay with us. Just because you get the decision, that's not time to tune out. That's the time to tune in, because then we have half an hour before Jerome Powell speaks. That's the moment we make some money. And I've just done $250,000 trade, a $32,000 win, our biggest trade ever. And I'll be sharing all that tomorrow. Tomorrow I'm being interviewed, 60-minute interview tomorrow, exposing everything that I've been claiming for the last 3 years. I always beat the market. I always beat Buffett. I always beat hedge funds. And tomorrow, that's all being challenged and questioned. Live, unedited, unscripted. Tomorrow could be my downfall, or it could be a big moment for me, right? Well, I have beaten the market. I have beaten Buffett consistently.
Let's turn to the price action. Got a king around
tomorrow,
the table, don't we?
You will see the interview live, unedited, unscripted, as it goes out.
On the S&P
Don't miss that. There's no opening bell.
Crude elevated. Mike McKee.
There's no closing bell. It's just that interview tomorrow.
No change in rates, but
there you go.
Four dissents.
Four dissents.
Beth Hammock, Neil Kashkari agreed rates should stay on hold, but they did not support including an easing bias in the statement at this time. Stephen Myron wanted a quarter-point cut. The last time there were 4 dissents, October 6th of 1992. As for that easing bias, the statement still contains the phrase, in considering the extent and timing of additional adjustments to the target range, a line meant to suggest that the easing cycle has not necessarily ended. The Iran war figures prominently in the economic overview. Inflation is elevated, in part reflecting the recent increase in global energy prices, the statement says. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook. The committee remains attentive to the risks on both sides of its dual mandate, it says, even though recent indicators suggest that economic activity has been expanding at a solid pace. Job gains have remained low on average, the statement says, and the unemployment rate has been little changed in recent months. The dissents open up a whole new line of questioning for Chair Powell. 4 dissents would ordinarily be a sign of discontent with the chair. Since this is likely Powell's last meeting as the chair, it may not be anything more than expressions of concern about the toll of the war. At each meeting this year, the number of open market committee members who have worried they might have to raise rates has increased. We shall see when we get a chance to talk to the chairman.
Mike McKee, stay close. I just want to run through the price action. I've got a big question to come back at you with in just a moment. Equities have stayed slightly lower, no drama here, down by 0.2%. Into this decision, yields were already elevated, particularly at the front end of the curve. They stay somewhat elevated, up 7 basis points at 390. This isn't the kind of decision that moves around crude. Crude is still higher by 6 to 7%, 118 on Brent. Whoosh. Mike McKee, I just wonder, coming into this decision,
Sensei's
we were talking
mate,
about
Mike
the
McKee.
possibility, the potential, the Federal Reserve introduced some symmetrical reaction function. But looking at that kind of dissent, I wonder if the dissent alone has achieved the same thing, just by introducing some two-way risk, given the level of dissent you can see in this afternoon's decision.
That's a very good point, because, of course, if Powell leaves the Fed, that's one less vote that we know would be on the easing side at this point. We're going to have to wait for the minutes unless the chairman wants to give us a number, which I doubt he will, of people who think that they should be at least suggesting the idea of raising rates in the future. But it's obviously grown since the last time, and feelings have grown more certain, at least among those who think that two-way warning should be included in the statement. It's very, very unusual. Obviously, it has been almost 30 years since we've seen anything like this, and it is definitely a sign that the Fed is split over this question. And one would think that if these people were willing to dissent because they wanted a two-way warning, because they did not want an easing bias in the statement, that they probably would have voted for a rate increase had that been on the table.
Mike McKee, appreciate your time. You get
There
the
we
news
go.
conference.
Okay,
Looking forward
we're
to your
going to
line
do
of
our
questioning
analysis
a
now,
little bit
which is
later.
a
That
damn
news
sight more useful, a damn sight more reliable than what you're going to hear on mainstream media. That's why we have 98% of our live viewers are members, more than CNBC, Bloomberg, and just about everybody else combined. So there you go. If you want to join us, become a member. And if you want to become a Discordian and never get a price increase ever, no inflation ever, one-on-one support with me and my team always, and no AI bots ever, then join us. Right, we're going to go back now to Sensei. He's with me. If you tap the like button, consider subscribing. We are now #1 in the world right now. We have more than CNBC. We have more than Bloomberg. I'm loving it. Absolutely loving it. This is anyway. Sorry, not Bloomberg. I beg your pardon. They have more. They have more. If I'm honest. And everything else. Right, let's go back to Sensei. Here he is. Sensei, mate. Oh, let me get off the screen. In fact, what I'll do is I'll just move my subscribers just over one side, because we do want to recognize when someone becomes a subscriber, but I just want to just shift it over there just for a moment. Well, we've got Sensei on the screen. Let me just take that off there. Martin Lucas Investor Alert. There we go. Just for a moment while I have Sensei. Sensei, what do you make of all that? We've got 25 minutes ago before Jerome Powell takes the stage. The market is starting to sell. If we have a quick look at what's going on very, very quickly, I just did a $250,000 trade, even in defensive, because I think there's major issues now ahead. We've made all our money for the year. We've quadrupled the market, what the market's earned this year. I've quadrupled the market, folks. How about that? The S&P is going down, Virgin Galactic down, Palantir down, gold down, Amazon going up. We've got the earnings, of course, tonight. We're covering it. Apple is down. Enphase Energy would be up if it wasn't for bloody inflation. Coca-Cola, I took my profit yesterday at $80.23, right at the top. Bought the bottom, $250,000. I said, do not buy it today. It's operating like a meme stock today. Do not chase this. Johnson & Johnson is flat. Chevron Oil is just going up and up and up. Tesla down. McDonald's down. Google is flat. Earnings tonight. I told you I took my profit there. Microsoft too expensive. Meta gonna 800, but not in these conditions. Nvidia, we sold the top. We took our profit. Did our tax lots through VUG. Walmart is an AI play now. Tilray Brands, I told everybody it's a joke. It's not happening the way you want it. No one listened. They pumped it. Now they've all lost their money on this thing. There's no bloody scheduling done. It's all bloody nonsense. Robinhood, I love Robinhood, but I told you it'd go down on the earnings. It did. And I said, I'm not buying it. This could go to $50. People hated me saying that. But now look at it. All right, Vertical Aerospace, it can't survive in this current climate. Archer Aviation, Joby, we have the best analysts in the world for this, who talks directly with the CEOs. That happens regularly. We've got a CEO interview, I think 2, coming up next week and the week after. So you won't want to miss that. And so far this morning, nobody liked it. I told you it was going down. I told you the CEO was a salesman. Boom, it went down. And I said, do not buy it. It's going to keep going down. But what did it do? It kept going down. Let's talk to Sensei live on the screen. Sensei, give me all your thoughts on what you've just heard about everything so far. Thank you.
Thank you, Martin. So we've just got what we expected. It was a hold, but that's not the question. We had 5 questions before we got that statement. One was, does the statement called somewhat elevated inflation stay in the statement? We had another question about forward guidance and additional adjustments. We had another question about how does the Fed describe the Iran war? We talked about the Powell's tone on the oil shock, and will Powell stay as governor on after May the 15th? Some of those questions were answered, and I'm going to tell you the answers to them. And some of them will be answered in 23 minutes time when Jerome Powell actually comes out and gives his probably final speech as Fed chair. He might stay on as a governor. We might find that out later, but it will very likely be his last speech because Governor Walsh this morning got elected. So what did we get from that statement? it was a hold. But what was crazy and was pretty not expected was the 4 dissents. We've got 4 people again essentially disagreeing with the statement. One person wants a cut, and that's Miran, and he said that multiple times. But a hike wasn't on the table, so people couldn't vote on that. But they didn't agree with the statement because they did not want the easing bias to be kept in. It seems like the additional adjustments was kept in.
Oh, I've just lost your audio. Carry on going, Sensei. Carry on. My mistake. Please carry on.
3 or 4 people have dissented against that, which is the most fractured FOMC vote we've seen in about 4 years. So there's about 1 dove, which is Miran. He's always wanted a cut. And there's now 3 hawks that are pushing back. This is not what the market was pricing in. This is not what was expected. The word somewhat about inflation is gone. They are now making it very clear inflation is a problem. So in March, the statement said, and I quote, inflation remains somewhat elevated. Tonight, it says inflation is elevated, in part reflecting the recent increase in global energy prices. That's a quote from today's statement that just dropped. That's the one word change that we were talking about in the newsletter, getting ready for, that flags as a regime change sort of signal within the Fed. So they dropped the word somewhat and explicitly tied inflation to energy prices for the first time. So this is a big sentiment change at the Fed. Also, the Middle East line that we quoted was also hardened. In March, the implications were called uncertain. Tonight, they changed those words to contributing to a high level of uncertainty about economic outlook. And that's a quote. So they're saying that this is high level of uncertainty. And we know what the market dislikes, and we know what the Fed dislikes, and that's uncertainty. And they've quoted that instead of saying it's uncertain last time, they're now saying it's a high level of uncertainty. Number 3, the biggest thing that we just got was, forward guidance survived. So the additional adjustments stayed in. That's why essentially we had 3 hawks dissenting. They want it gone. They want essentially rate hikes to be an option on the table. But Powell held the line. Powell hasn't shifted and said we want rate hikes. But there are 3 people there that say we need to have rate hikes on the table, and we need to start saying that there could be the next decision is a rate hike instead of a cut. 3 people are essentially saying we would prefer, or we would want to really start discussing rate hikes, and that's the biggest fracture. And I think that's the talking point for now. That's going to be in the news. Is going to be that fracture of people and governors actually suggesting rate hikes should really be on the table now. So those are the main things that we do want to take away. Again, the newsletter had all of this in place. If you did look at the newsletter, these were the exact points we were honing down on, and that is actually the biggest points from the statement. And as you said, Martyn, earlier, there is only 1 space left for that newsletter, and there is all those perks. And again, if you are a Discord member, then you can get the best discount. But we are running 25% off. There's 1 spot left for today, and what you get is these cheat sheets. You get prepared for FOMC. We are going to do a debrief tonight and send you out a newsletter on exactly what happens. We are going to send you cheat sheets for inflation events like tomorrow. You do get the daily newsletter, so you can stay up to date with all the news going on. You get the portfolio challenge, where we're looking at $5,000, hopefully catching up to Martyn and getting close to that 1 million, but that will take time. It's not a get rich quick scheme. So we do have the net worth tracker. We've got all of these perks. They're just bundled in with the newsletter. And our promise to you is to stay live, is to stay honest, and to actually be here. We've seen some crazy stories you're mentioning, and I was a part of that chat about someone coming over to our services because they said that the channels they're part of, they're just being, and these are big names, they're just being talked to by AI bots. We don't do that. We are real. We are live. We answer your questions. We send you voice notes. Be careful of the scammers, but this is what we do. We're not here to get rich. We make money through the markets. We are trying to give you the services. That's why the newsletter started. That's why I partnered with Martyn, because we are honest. We are real. We want to give you the best information. We're not bought. I don't have sponsors on the newsletter. I don't sell ads. I'm not bought. I tell you exactly what's going on. I tell you the news you need to know. We give you the chart training course as just an additional perk. Remember, our chart training course It's 3 hours long. You learn everything about the charts. It is academically researched, and it's just part of the newsletter. So if you do want to grab it, 25% off. We will be staying here for Jerome Powell's press conference starting in 15 minutes. There are some further points, but I'll, if you want me to cover them. But first, I'll give the stage back to you, Martyn.
Thank you, Sensei. Yeah, your newsletter is extremely valuable to me. I use it all the time. It is award winning. It's second bestseller on Substack. Had that achievement. And you talked to Michael Burry, and I'm very proud to be linked with you. And it's a great partnership that we have now in Discord. That Discord members can see the headlines every day, and then they can get access if they want to. They can buy the whole newsletter with you at the best deals. And you do stage events where you do charts and everybody. It's absolutely fantastic. So thank you for being here today. Taking the time out of, I don't know why I'm thanking you. You should be thanking me. This must be great for you. It's like you with your mate. The baby's like, thank God for that. Right? His wife will go, what? Sensei loves his little boy. I'm sure he does. But he might just want to break in between. That's all I'm saying. Don't fall out with me. Right? It's a bit of peace and quiet now. Anyway, Sensei's here. We're having a great time. Now, this is how we're going to make money, folks. This is how I'm doing it, right? Tomorrow I'm going to be interviewed. That 60-minute interview tomorrow where everything's going to be lifted up, all right? Compared to all the facts, the charts, compared to Buffett, compared to the hedge funds, compared to the S&P. You won't want to miss that event tomorrow. I'm allowing it to happen live, unedited, unscripted, without knowing anything. That's happening tomorrow. Join me for that. But this is what we predicted. This is what I said was going to happen. This is why I sold yesterday at $250,000 and took profits off the table with Coca-Cola. All right. So I think we're going to have inflation rising. I don't think we can avoid it. I think the next report, we're going to get a carry trade unwind. Sensei, you did do a report on that they held rates, but they gave a prediction of an insane jump in inflation, I saw. And that would be a reason to raise rates. Now we're hearing it a little bit here. And if we get raising rates, everything goes down, including my favorite defensive position, Coca-Cola. It's why I've trimmed from the top using lots. If you don't know what we mean about lots, tax harvesting, join us on Discord. There are stage events, two a day, where I teach you. There won't be a second one today because we've got the Google earnings and Amazon earnings with Vaz. But do join me for those events. I teach you how to actually, we've got, here is the Google event tonight. This is coming up. We actually show you how to do tax harvesting, how to do tax lots. So you can sell from the top. I always buy the bottom, and this will be in the interview tomorrow, how I always find the bottom of the market. Always do. Don't worry about the top, even though we do often get the top as well. But right now, I'm all in. I'm not out. I've got a tiny bit of margin left, a very small bit of margin now, about 17 grand. It was over like $500,000, right? We've sold $250,000 of Coca-Cola. We've taken profits. We're doing great, but all the market can go down now. So we want to be prepared for that. All right. Don't just live in cloud cuckoo land thinking everything goes up forever. And I think there's this oil issue, and the war has gone on too long. I don't see how we can avoid a recession. So there's always ways to make money. We always make money. Every market presents opportunity, but you want to be focused on the value. Let me just show you quickly my position, and I'll get Sensei's views, because Sensei is our expert on the charts and on crypto, of course. So I'm up on XRP. How many people can say they're up right now on XRP? Up 4%. Not overall. I'm not going to make this what it isn't, right? Well, I kind of am in a way. I bought at 38 cents and sold at $1. But the recent trade, I'm up 4.36. But overall on crypto, I'm down. But I've done tax harvesting, so future gains are tax-free. So we're up 4.37. I'm not buying XRP. I'm not buying any crypto. I can see XRP going to $1, especially if we get rates staying up, and if we get rate hikes, it's definitely going under $1. And I've got $500,000 to buy it, and I'll be doing that. Statement. There you go. I've made it. Ethereum. I've locked it up. I'm earning 2%. I'm up 10%. Great. Not buying any more. I'll buy a lot more if it goes lower. Bitcoin, same story. I'm up 12.5%. I'm not buying anything. Absolutely not buying a thing. I will buy more when it goes lower. Very likely to go to $50,000 before it goes to 100,000. All right. Next. I'm not in Doge. That's dust. The S&P 500. Now, the S&P 500, if you look at year to date, if we focus on year to date, we've got 10 minutes before Powell takes the stage. Year to date, let's look at the S&P 500, folks. It's not showing on my screen. Come on, give me a bit of grace. Here we go. Let's try that again. For some reason, my screen's not showing. There we go. Year to date. year to date on the S&P 500, the benchmark, it's up 3.47. 3.47. But if you look at my position on the S&P, I'm up 7.54 and I'm out of margin. No options, no shorts, no guessing, no gambling. But I'm up 7.53 because we told you the top was in October. It was. We sold it. We made a lot of money with Coca-Cola, and then we bought back, and now we're up 7.5%. But I'm not buying that. Absolutely. That has to turn red for me to buy more S&P, because we could drop 40% on a carry trade unwind. We then used our tax harvesting to buy VUG. We're up 11.7. That's my Google. That's my Nvidia. Great. Coca-Cola up 5.52. Great. Fantastic. We've trimmed it all off the top. I've still got 160 grand in Coca-Cola, so it's not like I'm out of it or anything, but we sold the 500,000 and we trimmed it. We did a 250,000 trade, and we trimmed everything down from a 500,000 margin to just 17 grand. Okay. So that's great. Now I'm not buying that either. Now you might go, why wouldn't you buy a defensive position if the markets are going to go into recession and if we're going to pull back? Well, the reality is this. If we go into a carry trade unwind, which is very likely, if we get a recession, which is in my book now very likely. Sensei, you're on camera. I don't know if you realise I brought you back on screen. There you go, mate. Just checking. So anyway, he might be watching the baby. I don't know. Maybe he's watching the maybe. Shh. All right. All right. Bloody hell. Anyway. If we get a carry trade unwind and a pullback, the S&P and a full unwind, you got 40% drop on the S&P. Coca-Cola would still go down historically over history, 10, 15%. It's not free money. It's not like, oh, it just goes up regardless. Take the profit. Crypto, on the other hand, will go down 80%, and your meme coins 99%. So be careful. Now, if you trade wisely, and I always say you should trade, even though I believe in long-term investing, I'm always in the market, so I am a long-term investor. But Warren Buffett, the market, doesn't just sit there idly and just do nothing. You take money, you reposition, you always adjust. That way you outperform the market. So all this will be challenged tomorrow. We've got 10 minutes to go before Jerome Powell. Look, the S&P year to date is up 3.4. Let's look at my position and show you stocks and shares year to date. Year to date, ladies and gentlemen, just Coca-Cola and the S&P, 20%. That's 5x the market year to date. Who has done that? No hedge funds done that. Warren Buffett hasn't done that. The S&P is up 3.48 year to date. I've only got in there VU and the S&P 500. The S&P 500 and Coca-Cola, right? And I'm up 5 times what the market has done. Okay, this is being achieved by not guessing, not gambling at all. This is just basically looking at the market for what it is and not what we want it to be. Now, if you're following people on X, if you're talking to social media influencers, you're losing money. Stop losing money. Read Sensei's newsletter and win. You can get the newsletter. A really great discount live in the chat. We've got one place left. If you want the best deals always on Discord. Now, I know Discord is fully booked today, probably already tomorrow. We only allow a couple of places a day. That's it. If you want to join Discord, $2.99. Suggest you go Pro for $4.99. Do it through a browser. Don't give Apple a commission. There'll be no price increase ever, no inflation ever, and you'll get one-on-one service with me, direct messaging with me, talking to me, live on stage events. Sensei will come in and do chart reading for you, show you charts for free. He won't charge you for chart reading, for free. You'll get the news headlines. And then if you want the whole newsletter, you get it at the best discount. I said to Sensei, when Sensei came on the show, Sensei, I've toured the world as the world piano man, done everything I want to do. I don't just want to make money out of YouTube. I make money out of doing what I do, investing, working, singing, playing, whatever. Let's build the best YouTube channel in the world. Let's have the best newsletter in the world. Mainstream media is down the toilet. People want real, live, everyday, accountable, not hiding behind videos once a week. Being here, live in between Sensei. Look, you can see he's looking over at his baby. I know he is. He's probably got me turned down quite a bit. Anyway, that's what it's all about. So be part of our family. Now, I will onboard everybody on Discord at the end of this event. I know there's been some super chats coming up, but I've got Sensei on screen, so I'm just trying to hide it for the minute. I will share them in a moment. Sensei, we've got just 10 minutes to go before the market, before Powell takes the stage. You've heard what I've said. You've seen my performance of how I've 5x'd the market this year. And when you think about that, that's only like 20% in the first couple of months of the year. And I did that all in about 1 month. So, and that's not with any options, no shorts. What do you think about the market right now? What's your thought? I've told you what I think. Recession is 90% likely. Carry trade, 95% likely. What's your thought? And please disagree with me wholeheartedly. Where do you think we're going to go with the rest of the year?
Yeah, I on that question, it's a difficult one. I never want to bet against the market, and you don't bet against the market.
I'm still in. I'm all in.
And I'm in the same frame of mind. I don't like to bet against the market. I don't like to be negative on the market. And that's why, personally, 80% of my money is in index funds and the top cryptocurrencies. And that just sits there because you don't want to bet against the market. Long term, you'll win. However, on the part where I actively trade, the part where I want to beat the market, I am more prepared for the eventuality of a serious correction, a bear market, a carry trade unwind, an AI crack forming, and the reason that I am a bit more in bonds or looking for different opportunities within that 20% is because I think it is quite likely there is going to be opportunities presented our way this year, whether it's in crypto or in the stock market. There is a lot going on, which might give, in my opinion, maybe a 30, 40, close to a 40% chance of a recession. And if there's a 40% chance of a recession, even if you think there's a 40% chance of a recession, you want to really be prepared for that scenario and be able to buy the close to the bottom or the bottom. So yeah, I agree. This year is I think it's, instead of calling it a down year or being all negative, I like to say it's going to be a year of opportunity. There's going to be so many opportunities presented, in my opinion, and that could be by the market going down. And if it doesn't go down, well, we're invested long term. We've got most of our money in low cost indexes, and that's going to make money. And there'll be opportunities anyway in different sectors, and we'll find those sectors and those specific stocks and still make money. But it does look like a year that the markets are going to go down, and that's an even bigger reason to be prepared and start getting ready for potentially an eventuality of a recession, a carry trade unwind, an AI crack, an inflationary shock, whatever it could be. That could really present some opportunities, and that could be the market going down. And crypto's still in a bear market. I mean, people don't like to admit it. Bitcoin's still at 75,000. It's still down from the highs of 120. The stock market's at all-time highs, and Bitcoin's still down. I've said this 8 months ago, and people hated it. I said, we're going into a bear market. Follow the 4-year cycle. Look at what's going on. People didn't want to listen. People continued to buy XRP at above $3. People continued to buy Bitcoin at 120,000 when I said it's definitely coming below 100,000. I said it's coming down to 60, 70, 50, 40,000 even dollars. And I got a lot of hate for that video, but that video is out on YouTube, and you can see when I called for the bear market. And here we are. We're still in a bear market. Can that change? Yes, it can. Should you be prepared for it to go up? Yes, you should. But look at the facts. Look at the indicators that we produce on TradingView. Look at the chart formations. Look at the bear flags. Look at the lower lows, lower highs. That's Bitcoin. It's down 70, 80%. Oh, 60%. The altcoins are just dead. Forget about XRP and Solana for a second. Look at all the other altcoins people like to go all in on. They're down 95%, and they will continue to bleed against Bitcoin until liquidity comes out, until we start heading into the Bitcoin halvening, and they're going to continue to get crushed while you're missing out on opportunities in the stock market. So I still think it's we're not there yet for a massive run on crypto, and I think we are in store for maybe a bit of a correction in the stock market as well. So I agree with you.
Yeah, thank you very much indeed. I appreciate your thoughts. And just to be absolutely clear, folks, like Sensei just said, I'm all in. All I've done is taken off the table the margin position, what I'm paying 4% for, because I don't see an extra 4% in there. So I'm not going to pay 4% to make no money. And also it gives me buying power. Just in my main account, just in this account, I've now got $250,000. You see that? That's buying power ready to buy. But I'm all in. Every penny I have is invested. I mean every penny. I'm not out of the market, but I'm in good positions, and I've repositioned. I've made money, and I'm in at the bottom. So I'm protected. If it goes down, I don't mind. I'm probably still going to be up even when it goes down, and then I can buy even more with the profits I've made. Just being in the market and sitting there and being passive. I just realised my clock's all out of sync, and I hope I haven't missed it. Bloody hell! I've got 1 minute to go. Literally, my screen had frozen, and I didn't realise I was that close to the time. Bloody hell! That would have been extremely embarrassing. Right, Sensei, I've got to go over and go to the chairman. Thank you very much indeed. Stay with us or call back, whatever you feel comfortable with. Thank you for being here, Sensei. You've been a tremendous help today. Thank you very much indeed. Thank you.
Thank you.
There is Sensei. Right. Oh my God. I cannot believe my screen completely froze and I had no idea what was going on there. God, I could have been in right trouble there. But anyway, as it turns out, I'm fine. I saved it. Right. Okay. Here we go. Let me bring in the chairman of the board, Jerome Powell. Stand by. We're just seconds away from this happening. Here we go. We've got exactly 30 seconds. So please stand by. This could be Jerome Powell's last presentation. Here we go. In fact, I'll bring it on the screen for you right now. We'll go over there so we are set, ready to go. There is no hanging around when he appears. This is important, folks. Here we go.
Federal Reserve to articulate
Any
a more
second now,
symmetrical
folks.
reaction
Stand
function.
by.
Ultimately, that view was voted down. How this Federal Reserve is set up for Kevin Walsh, what kind of FOMC he's inheriting is going to be an important part of the discussion that we have over the next 60 minutes in this news conference. And also, the future of this chairman, not as the chairman, but as a governor of the board. He has the option to stay there until 2028. Will he take that option? Will we find out in this news conference? The last time we heard from the chairman of the Federal Reserve, he wanted that DOJ investigation into this institution wrapped up with transparency 1 and finality 2. Have we met his bar based on what we've heard in the last week?
And has anything that the Fed did in terms of the committee and the dissents there given him a green light to take this exit stage and go off to golf and give speeches, etc.? Ultimately, what he says here will be more for the political aspect than it will necessarily for the path ahead for the Federal Reserve, because ultimately that job has been done. The committee is no longer a committee of 1. It is a committee of 12, and they are asserting the power of disagreement. That, I think, does make it somewhat easier for him to come out and have his swan song.
This is how the stage is set going into this news conference. The scores look like this. Equities on the S&P 500, negative by just 1/3 of 1% on the S&P. On the Russell, the small caps down by about 1%. The move in the small caps driven by this move in the bond market on 2s, 10s and 30s, elevated at the front end of the curve. A move on the 2-year of some 10 basis points. Call it 8 or 9 right now at 392. That's the move in fixed income off the back of this big move in crude. 8 consecutive days of gains for Brent crude, the longest daily winning streak we've seen for Brent going back to 2022 and May of that year. For the final time, your chairman of the Federal Reserve, Jay Powell, steps up to the podium. Let's take a listen.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months. Inflation has moved up and is elevated, in part reflecting the recent increase in global energy prices. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas. I've said that I will not leave the board until this investigation is well and truly over with transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair.
I can't
Once sworn in as
believe
board
this.
chair, his new colleagues will elect him to chair the FOMC as well.
8,925 has become a member.
As
You
I
will be
regularly
missed,
point out from this
JP,
podium, our
regardless of
success
what
in
maggots
delivering our
think.
goals matters for all Americans. I'm confident that
Everyone
the
can
Fed will
share their
continue to
thoughts
do its
live
work
on the
with
screen. You
objectivity,
can all do that.
integrity, and a deep commitment to serve
That's being shared
the
by
American
you, the
people.
viewers.
Thank you, and I look forward to your questions.
Please tap the like button, consider subscribing. Everyone can have
Thank
a
you, Mr.
voice.
Chair.
Everyone can
Appreciate the
call
kind words
in.
about
Every
the press.
comment
Often
shared on the
doesn't come
screen.
from the podium
Thank
in
you.
different places, but appreciate that. Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way, free of political influence. It's part of the absolute foundation of this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy of the world. That piece of institutional architecture separates successful countries from unsuccessful countries. It is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was that?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if you left?
I don't see that at all. As I mentioned, I'm literally staying because of the actions that have been taken. I had long planned to be retiring, and the things that have happened in the last 3 months have I think, left me no choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere. My intention is not to interfere. I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Nick.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March, before getting to the energy shock that is now on top?
So, I would look at it this way. For a long time, we've been working on the hypothesis, really, that tariffs would lead to a one-time price increase,
Wow.
and that would
We're
go
about
away
to
over
hit
time. In other words, there
113,000.
would be no further change, so measured inflation wouldn't reflect
Big milestone.
that
Thank you
higher
very
level
much. Everybody
going
join
up
in.
more and more.
Thank you.
And it's time for that to happen. We really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we've thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy, it's so hard to say. I mentioned, in sort of the textbook, you would look through an oil shock because they tend to be short-lived and they tend to revert. And monetary policy works with long and variable lags, so you wouldn't necessarily react right away. I think that is all the more true given that we're several years above 2% inflation and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we'd want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe, given how different the inflation outlook is now versus a meeting or two ago? And what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting, and we talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate, and that kind of thing. And I would say that the
Google and Amazon earnings coming up live on this channel, the whole thing live,
language change,
right after
changing
this,
to a more neutral stance, so that a hike is as likely as a cut. That number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation is 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? We have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So, it's a much closer thing on the committee than it was in March, and that makes all the sense in the world, it seems to me.
So Claire Jones, Financial Times. Just going back to this issue of the easing bias, we've now got oil approaching $120 a barrel when it comes to the benchmark Brent crude. If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. Well, first of all, we're going to have new leadership in all likelihood by then, and new leadership is going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. A majority are still on the page of not feeling the need to move to that level, and that's where I am. I get it, though. At a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. And just to follow on, the new leadership also seem rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools?
So I'm not going to give him any advice through you today here, but I think communications generally is. I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things, and if that happens, it feels like it's going to happen. That's a completely appropriate thing.
Hi, Chair Powell, Neil Owen with Axios. Can you tell us if you've been in touch with incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. The last process was with Janet Yellen, with whom I had worked for 6 years, and so it was, we were sitting down the hall from each other, so it was a very different thing. I think this is and will be a very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
Quick follow-up: is the Supreme Court ruling on Governor Cook a factor in when you may leave as a governor?
I wasn't thinking of it as such, but no, not really. I mean, I'm thinking more of the other things I mentioned.
Chris.
Hi, thanks for taking our question. I wanted to ask a question about your tenure, and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market? And should they be?
I don't know the answer to that. I mean, what we experienced.
Google earnings next. Join us for that, and Amazon at the same time. Big night for the big Mag 7.
Really
we'll be there live with it. Don't miss it. Right after this.
For a long period of time, and no reaction from inflation. And we all very much took notice of that. We also noticed that the biggest wage gains were going to people at the bottom end of the
you've never had
spectrum.
from Google before.
And we had many reports.
Share with you. As I work for YouTube,
I mean, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, setting up in people who were confined. And like training them before they got out, and it was a very healthy sort of set of societal dynamics. So of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very, very similarly all over the world that had to do with closing, reopening, stimulus and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think that insight was in any way responsible for the high inflation that we experienced. So, I mean, I think it's always been a balance. You've got to be strong on both of our dual mandates. And we for example, now we don't feel that the labor market is at all a source of inflation, so we don't need to be worrying about that. It's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it, but not now.
Just on the other issue, do you need more assurance from the Justice Department before stepping down? Is that what you're waiting for, or what else?
I'm waiting, for the investigation to be well and truly over with finality and transparency, and I'm waiting for that, and I will leave when I think it's appropriate to do so.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. I'd like to ask you if you could explain a little more or characterize a little more the discussion about the two-sided view and interest rates, because there were some members of the Open Market Committee who've been suggesting that we may need to raise interest rates even absent the war because inflation was not coming down fast enough. Is there any sense that interest rates might have to go up, or was this just a setup to sort of warn people that you're worried about the war impacts?
So nobody, the three dissenters and others who could have supported that, and others who were voters and non-voters who preferred it, they all supported the right decision, right? So people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be neutral? And what are markets doing? People argue that this is consistent with markets are doing. And again, it's a very fair question, but these changes, it's a form of forward guidance, and you want to make them in a way that will be sustained and continue to make sense, and not something you need to take back, fairly quickly. So I think we just a group of us, including me, didn't feel like we needed to be in a hurry on that markets are not confused about our reaction function. We don't have a problem to solve on that. But the other side of the argument is a good argument, too, as I mentioned. It's a perfectly good argument to be having, good discussion to be having. So, and it came out the way it came out.
Well, you've got 3 dissents in favor of two-sided warning. You've got yourself staying on the board. You've got the criticism that does come from elected officials, and you've got a lot of critics who have faulted the Fed for being too slow 2021 with inflation. Are you worried about Fed credibility under all of this? Is that one reason that you want to stay on?
Not driving my thinking now. I mean, monetary policy is going to get made by, 19 people. There's a lot of stability there. I mean, if you think about it, every new Fed chair has the same situation, which is you've got 18 colleagues on the FOMC, 11 of them vote during any year, and your job is to create consensus. It's to talk to them, understand them, be inside their thinking, and be able to pull them together and get consensus and move. And that's what every Fed chair has to do. And I think Kevin Warsh is actually quite well. He has the capabilities, skills to be very good at that, I would think. So I think I'm not so worried about that process. I think that'll work itself out.
Thank you, Chair Powell. Howard Schneider with Reuters. You mentioned that staying on as a governor, you intend to keep a low profile. I'm just wondering if you could give us a little more detail on what that looks like and how you can... Touche. Walk down the steps. What that looks like, and particularly around the policy discussion, how you're able to have your intervention and not be a shadow chair and not have a kind of an outsized influence over the process.
Yeah, that's just something I would never do. The shadow chair thing. No, I don't know what the exact specifics of it will be, but I'm going back to being a governor. I respect the role of chair. I was a chair. I was a governor for 6 years, and I know what that's like. I know, and I had a pretty front row seat particularly with Chair Yellen, to whom I was close when I worked with Chairman Bernanke for 2 years, but I was brand new at that time, so I got a sense of what it was, and I had real sympathy for how hard it is to get that group to consensus. And I always felt like I don't want to add to that unnecessarily, and that means try to support the chairs where the direction the chair wants to go in, if you can. If you can't, you can't. And I think that's the way it's always worked there, because the chair only has one vote, plus the ability to develop consensus. And if people won't be, they won't, if they're not flexible at all, then how do you ever do that? And so that's why the authority the chair has really is to develop relationships with people and work with them, and then put something forward that has consensus. And I propose to be a very constructive participant in that process, really out of respect for the office of the chair.
And in your view as a soon-to-be governor, how do you see the risks of oil prices bleeding into core inflation in coming weeks? Because it seems like the commentary that was coming from particularly some of the Reserve Bank presidents, they were elevated concerns about the bleed into core. And, here we are with 3 dissents now. What do you see as the prospect of a core inflation?
Those prospects are real. Remember, though, they're real, and the real thing is we're going to have to wait and see. We're going to need to see. And the good news is we think our policy stance is in a very good place for us to wait and see. We're right kind of at the high end of neutral, or perhaps mildly restrictive. The labor market shows more and more signs of stability, whereas inflation is kind of misbehaving. And so maybe a little bit of restriction or the high end of neutral is just the right place to be. So we can wait here and see how things work out before we act. And we'll see how much that, how much does come through into core. You see it already in airfares, of course, but you may see it in many other places. We just don't know yet, and it's so unknowable because how long will the strait be closed? You can develop any number of scenarios that you want, but we really won't know until we know. So fortunately, we're in a good place to wait and let things develop.
Thanks, Mr. Chairman. You started holding post-meeting press conferences for every meeting as opposed to the ones with just with SEPs. Can you talk about why you see that as a net positive?
So we always said when we were doing quarterly press conferences, we always said we can move at any meeting, but we only ever moved at the quarterly SEP meetings where we had the press conference. So if you think about it, during the pandemic, we were moving like a lot at every meeting and sometimes between meetings. And doing that without a press conference, I think, would have been quite challenging. It's become the industry norm. It's the standard. I don't know whether that has to remain that way. I don't know. I mean, it's just something people have become used to. And I do think it's quite helpful to I try to deliver a message on behalf of the committee rather than 18 other people going out and delivering their message, and it's going to be all over the place because we do, thankfully, have widely disparate views.
Okay, thanks. The other thing I wanted to ask about was the communications review from last year. Could you describe the debate last year? What changes were considered, what you wanted, and what prevented action, any action on those changes?
So I'm not going to go into the real small specifics, but what we found very quickly was that making changes, making really large changes, for example, to the dot plot or the SEP, it didn't have. We couldn't come up with anything that had really broad support on the committee. And so we just moved on. We didn't really do as much on that as we might have. And I was never the world's biggest fan of the dot plot, but you can't beat something with nothing. And we've looked at a bunch of things, and it's something. Like I said, I think every new chair is going to look at our suite of communications and think about what would be changes. We are the only major central bank that doesn't publish a forecast, and that's because we have a 19-person committee, and you try to do that at the board. That's hard. At the committee, that's hard. It's hard if you do it at the staff. So it works. I think our communications are fine, but looking at doing it in a different and better way is the most natural thing in the world.
Thank you. Colby Smith with the New York Times. If I could follow up on Mike's question about hikes, are we right to assume that the hawkish outcome for the Fed is still one in which the committee just extends the pause in rate cuts? And to what extent is there a growing sense within the committee that monetary policy really isn't just restrictive at all right now? The economy is holding up relatively well despite this major energy shock. The unemployment rate has ticked lower. Inflation was moving sideways even before the war and is now moving higher. So where is the committee at on that debate?
Where we're at is we think our policy rate is in a good place. If we need to hike, we will certainly signal that, and we will certainly do it. And if we need to cut, then if it's appropriate to cut, then we'll signal the opposite. I think because we feel like we're in a good place to move in either direction. Nobody's calling for a hike right now. So it really is going to depend on how things evolve, and that's really where it is. As I mentioned, much closer question this cycle on changing the guidance, but ultimately we didn't.
And as it relates to the war, at what point do you think the risk to growth will be larger than the risk to inflation as this conflict drags on?
You just have to find that out empirically. Given our the fact that we're a big exporter of energy, and that our economy is far less energy intensive, oil intensive than it was during the 70s, the effects on the United States are really substantially less than those of Western Europe or Asia, who are feeling much greater effects from these things. The effects we're feeling in the current situation currently and in sort of what's priced in, which is a relatively quick outcome. If this goes on for much longer and prices go much higher, then we'll feel that much more. And of course, I'm talking about aggregate inflation numbers. We're very well aware that people are experiencing higher gas prices all over the country now, and that hurts. And those hikes may continue to happen. And other things are going to start to reflect airline fares I've mentioned, and other products and services that are dependent upon petroleum and derivatives of petroleum. People are going to start to feel that.
Edward.
Thank you, Chair Powell. Edward Lawrence with Fox Business. So I guess I'll just ask you directly on this. The markets don't see a rate cut at all this year, is what they're predicting. Do you think that we are at the neutral rate? Why or why not?
The neutral rate is we cannot know it with certainty. I think pretty close to the neutral rate. Yeah, I always had it between 3% and 4%. We're a little north of 3.5%, so that's well in the range of what I would consider a reasonable, but at the higher end of the range of what I would consider reasonable neutral rate. I think the labor market is still probably cooling off just a little bit, and I don't think there's much of a case for any case really for policy looking meaningfully restrictive, maybe mildly restrictive or neutral, I would say.
And I want to follow up on some of the other questions about your future a little bit. The first time we've seen 4 dissents now since October of 1992. Are you handing off a divided Fed?
The thing to remember is we have always had vigorous debates, and they're excellent debates. I have to say they've been really good, and we're in an unusually difficult situation. So we've really had 4 supply shocks. You can say more than 4, but at a minimum, we had the pandemic, we had the invasion of Ukraine, we had tariffs, and now we have Iran and the oil, the oil spike. So every supply shock has the capability of driving inflation up and unemployment up. And what do? The central bank has a really hard time knowing what to do. So the right thing to do is to try to balance the achievement of those 2 goals, and that's what our framework calls for us to do. But these are really tough, difficult judgments. You've got to have a forecast for each variable. You've got to think how long it's going to take to get back to target. You got to think how restrictive or not is policy. So it's only natural that you have a range of views on the committee. People are going to see it different ways. They're going to have different risk tolerances and that kind of thing. I mean, if everybody agreed, that would be surprising. And I think it's partly a function of the extraordinarily challenging set of supply shocks that we've been dealing with now for 5-6 years.
Thank you so much, Chair Powell. Selena Wayne with ABC News. Are you confident that Kevin Warsh will stand up to political pressure from President Trump?
So he testified very strongly to that effect in his hearing, and I'll take him at his word.
And when it comes to gas, right now it's over $4 a gallon. Inflation just hit a 2-year high. Should Americans expect to be paying higher gas prices for the rest of this year? And in your view, does that take a rate cut off of the table? And secondly, by staying on as Fed governor, what message do you think you're sending to the president?
I don't know what gas prices are going to do for the rest of the year. And it will depend on how long the strait remains closed and how quickly it can be reopened and that kind of thing. But remember, when gas prices go up, that's disposable income coming out of people's pockets, so they're going to spend less on other things. So there will be a hit to GDP. So it's a question whether spending goes down to offset the inflationary effects. So it's not the answer isn't obvious ex ante whether you should move your rate over because of that. We'll have to see how it evolves.
And the message it sends to President Trump by staying on?
I'll stand on what I said earlier.
Victoria.
Hi, Victoria Guido with Politico. During your tenure, Fed independence has come under pressure in a lot of different ways. And I was just wondering, practically speaking, where do you see Fed independence as coming from? Is it the law? Is it political support from Congress? Is it the actions of the Fed? What what sustains Fed independence?
Well, it's to a significant extent, it is the law. And, we've had to go to court to successfully so far to defend it. But, the law does create a setting in which the Fed can and is directed to make monetary policy without consideration of political factors. And so part of it is the law, but it goes beyond that, though. There's a set of customs. There's a boundary line between the Fed and the administration, between the Fed and the Treasury Department, and we need to continue to respect those boundaries about what the Fed is responsible for and what the Treasury is responsible for, and what the rest of the administration is responsible for. So some of it is legal. In fact, it's all legal at the end of the day. But it's more than just monetary policy. We don't want to use our tools to. We haven't wanted to use our tools to achieve goals that are really clearly outside our mandate. Every administration looks at our tools and thinks that would be good to repurpose those to serve other purposes, but that's dragging us into politics and into fiscal policy. So we've resisted that.
About to hit 113,000 subscribers. If you'd like to join us, it's a wonderful achievement. Thank you so much for being here today. We love you all,
Look, I think
and
it's
we aim to be the best server
I think these
YouTube channel in the world. That's our aim.
These legal
Thank
assaults,
you so much
if you will,
for your support.
As I mentioned, the institution is being battered over these things. We're having to resort to, the courts to enforce our legal. It's not so much independence. It's really the ability to make monetary policy without political considerations. That's what we're talking about, and we've had to do that, and we've been successful so far. But that's not over. None of that is concluded yet, and it's really important. It's not about people who work at the Fed or the institution. It's about the benefits of a central bank that makes decisions based on analysis and our best thinking, rather than trying to help or hurt politicians. It's that there's a bright line between central banks who do one and do the other, and successful countries have uniformly, successful advanced economy countries have a really strong set of protections around their central bank just for that reason. So that's what it's all about. I think I am confident, as I said in my remarks, that the Fed will continue to make its decision based on analysis, rigorous analysis, and not on political considerations. But we've had to fight for it, and I'd like to think that we can get out of that era and go back to respecting, what the law says and what custom has been, which is to, let the Fed do our thing. It's an institution full of human beings who work super hard to get things right for the benefit of the public. We're all human. Don't expect for perfection, but do expect us to make, decisions without political considerations and the very best analysis we can bring.
Katerina Saraiva, Bloomberg News. How would you characterize what you've heard from your colleagues on your decision to stay? Do you have their support? And then have you heard concern from your colleagues about continued legal attacks from the executive branch? Is this something that others have, talked to you about?
So I think that I don't want to report on what my colleagues think. They can speak for themselves. But there are widespread concerns that these things may continue. That's all I'll say. And and that would be a problem. And so.
And then I just also wanted to ask about Governor Waller's speech on the reserve banks. Do you have any thoughts on centralizing some of those functions in the way he described? And then are you concerned that something like that could potentially be a slippery slope to, to consolidate reserve bank functions even more in such a way where the central bank ultimately loses some of that important regional information?
So we try to be good stewards of the public's money and efficient, and Chris Waller is particularly passionate about that. Of course, so are the reserve, so are the presidents, and it's a question of how do you accomplish it. We of course, and Chris said this in his speech, we want 12 strong, independent central banks with their own staffs and their own monetary policy views and all that. But there are things that are done in all 12 which could well be done at one much more efficiently and with cost savings. And so there's a back and forth going on that. But everybody's on the same page. The other thing he touched on was the idea of removing Reserve Bank presidents from office over different views on monetary policy. And I would just agree with him so strongly that would be the beginning of the end of the Fed's ability to make monetary policy independently. If every administration could come in and do that, you're just another cabinet agency at that point. So that's not something that I would support. Chris said the same thing.
Christine. Thanks, Chair Powell. Christine Romans, NBC News. I want to ask about legacy. When the history books are written, how do you think your stewardship at the Fed will be remembered for the past 8 years?
I'm going to just say that that's for someone else to say. I'll give you a mulligan on that.
All right, I'm going to ask you about misbehaving inflation then. You talked about those 4 big shocks, supply shocks over the past 5 years, and inflation still misbehaving. What's your message to American families who feel like inflation has not been under control for them really since the COVID reopening?
We're committed to bring inflation back down to 2% and sustainably. That's our goal, and we'll stick at it until that happens. We keep getting these events keep happening, which keep driving up costs, and the best thing we can do is to use our tools to guide inflation back down to 2%. I think trying to get there really quickly could be very costly in terms of job loss and things like that, but we try to get there over time in a way that does the least damage possible, and our commitment to that is never-ending and unshakable.
How would you describe the economy outside of the misbehaving inflation? I mean, it's still awfully resilient given all of the blows.
I don't know that you can be awfully resilient. So it's actually quite resilient, I would say, because it's a positive thing. If I can have that amendment, yeah, the growth is really solid across our economy. Some of that is that consumer spending is hanging in pretty well. The most recent data are good. And some of it is just the apparently insatiable demand for data centers all over the United States. So a lot of business investment going into building data centers, and every reason to think that continues. So you've got an economy that's growing at 2% or better. PDFP, which is private domestic final purchases, which is really a better signal of a momentum in the economy, is actually higher than that. So that's a positive thing. If you look at the unemployment rate, it's 4.3%. So that's a low rate. That's pretty close to mainstream estimates of the natural rate. We've been there for a long time. So it doesn't feel like a good labor market to some who don't have jobs, because quits are really low, hires are really low, and there's effectively no new net job creation. So that's in a sense, the labor market is in balance, but it's an unusual and uncomfortable kind of a balance where people who don't have jobs will have a hard time breaking in unless somebody quits their job. So that's pretty good. Inflation is the thing we need to work on, and it's partly tariffs, which we think that inflation should subside over the course of this year, because it's kind of a one-time increase. It shouldn't be repeated, and that should start happening pretty soon. The energy inflation that we're getting should go through fairly quickly, and we'll just have to see how that works out. In the meantime, we think our policy stance is in a good place for us to hold and wait developments.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. At the risk of beating the dead horse here, clearly 3 members objected to keeping that easing bias in the statement. And you said that the majority still didn't need to move to new language at this point. So does the majority of the committee still have a bias towards cuts at this point, or has the bias on the committee shifted away from cuts towards holding or hikes if that was needed?
So I think that, the center is moving toward a more neutral place, and that's sort of what markets are saying too. I just think, there's a lot of signaling going on when you change guidance like that, and so we just, I guess a majority of us didn't feel like we needed to send a signal on that right now. But maybe it'll come to that. And the reason is because
about to hit
we're kind of
113.
waiting to see what happens.
Would you like to join us? Thank you so much.
Events in the Middle East and what are the implications of those events for the U.S. economy. So there's a group who feels like we don't need to be in a hurry to do that. We get it, and of course we will move to
I've
a
got
hiking
Sensei
bias
with
if
me
we
as
wanna
well,
hike,
joining
and
me in a
we'll move to
second,
neutral
live
bias
on the show.
before
Here
that.
he
But
is,
there
coming
was a
in just to
difference
sort
over
of
whether
let
to
you
do
know
it
he's
at
here.
this meeting, at a meeting at which all but one of us agreed that the rate decision was correct, which was not to move.
And
He's
you
back
just
in the
said
shed.
moments ago that you believe Fed independence is at risk. Is it safe to say that you want to stay on as a governor to serve as a check and balance on that?
I want to stay until I will stay until I feel it's appropriate for me to leave. And yes, that is really what is driving this. I'm not looking to be, a high profile dissident or anything like that. I'm more looking at the other aspects of this and wanting to see that things have calmed down and we're returning to a traditional model of working with the people that you have and bringing them to consensus and respecting that consensus. That's what I'm hoping to see.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. You've made many tough decisions in your time.
Coming up
at
in a
the
few
Fed.
minutes, live
And
on the
as
show,
your time as
Google
chair
earnings
comes to a
and
close,
Amazon
and you think
earnings
about your
at the same
tenure
time.
and perhaps your legacy.
See how we pull it off.
Are there
Join
any
us for that
decisions that
any
stand
moment
out
now.
as
Straight
ones that
after
you're
this, next 5
particularly
minutes.
proud of? And are there
We have
any
Sensei
that with the
2
benefit
for
of
debrief,
hindsight
and
you
we're
would
giving
take a
away
mulligan on?
5,000 Luca coins. Stand by.
Yeah, it's hard. I wouldn't want to single out individual things at this point. I'll just say, we all of us together have consistently tried to do what we think is best for the American people based on our tools and our objectives that Congress has given us. It's been very challenging because we've been in a situation of supply shocks really for 6 years. And that's just a very different situation than for a very long time. What the Fed and other central banks were doing all the time was demand management. And there was always the inflation mandate, but inflation was low for 25 years. So this is a very different world and a much more challenging one where you have to balance the two objectives. And by the way, central banks that have an inflation mandate have to do exactly the same thing because they're balancing economic activity. So that's been challenging, and we've tried to do our very best through these really challenging times. And I'm really proud of the work that I've done, that my colleagues and I have done during these years.
Now, to follow up on some of the discussion around
inflation
Fed independence, can you explain to the public why this notion of Fed independence, which might sound kind of wonky to some, is so critical? I mean, what are the consequences if either the Supreme Court rules against Lisa Cook or the Fed in the future decides to make decisions more around the political calendar instead of the economic data?
So every major advanced economy in the world has made the same decision the United States has made, and that is that they want to take the making of monetary policy, the setting of interest rates to support the economy, to achieve maximum employment and price stability. They want to take that out of the direct control of elected politicians. And the reason is elected politicians are always running for election, and they'll always want low rates, and that will lead
19
to
to go.
inflation over
Let's
time.
do it.
So after
113. Let's do
literally
it.
centuries of experience with that, the whole world moved to the different model, and it's worked great. I mean, this is the era in which inflation was under control for 40 years. Then we had the pandemic, inflation everywhere in the world, and now we
just
have
gifted a membership.
inflation
Thank
that
you.
had gone pretty much all the way back to target, really close to all the way back to target, and now is being buffeted by the energy shock, and the U.S. buffeted by the
Oops,
tariff
I was
shock
muted.
as well.
Sorry.
So, but what I would say to the general public
I can
is
see
that's
Sensei
the
about to tell me.
backstory. Is that don't think about it, an institution being independent. Think about it this way, that you want people to make monetary policy and set interest rates to benefit the general public and to try to achieve economic goals, which are maximum employment and price stability, and focus only on that and ignore
We're just giving away more
political
members.
considerations.
RC3 is
Completely
donating memberships.
ignore them.
Thank you.
This isn't bipartisan. This is
You
nonpartisan.
can win if you are subscribing
so we
or
wanna just, we
engaging
just
in the
work
chat.
directly for the American people doing these things. We don't think,
this.
I want to do this
There it
because
is.
the
New
president
member.
says it's a good idea, or because there's an election coming up and I want to speed up or slow down the economy. I mean, think about that. If that's what we were doing, we'd have no credibility. Markets would lose faith in us, and our ability to control inflation and have any respect would be gone. And let me say, whatever people say, the markets believe in that we will produce 2% inflation. If you look at longer run expectations, markets believe that there's no sense in which our credibility in the markets has weakened. It's just not the case. It's people do get it, that this is our commitment and that we will achieve it, and it's priced in. If you disagree with that, then you can go ahead and bet against the markets, but the markets are pricing in Fed credibility.
I totally agree with that.
Richard for the last question.
I've managed to 5x the market this year, so I believe in the market.
Thank you, Chair Powell. Richard Escobedo with CBS News. We talked a lot about gasoline prices and even you mentioned airline ticket prices, both of which are up dramatically because of the war in Iran. And so I wonder, are you seeing that weigh down consumer spending in other parts of the economy? And if so, how worried are you that that will be a drag on growth?
You don't see it in spending yet. You really don't. I mean, as one of your colleagues
Google
said,
earnings,
the economy
7
has
minutes
been
away. Plus we
resilient.
have
It really
Sensei
has.
live on the
Not
show.
just
Stand by.
this time, but it's been remarkably resilient for some years now. The U.S. economy has just powered through shock after shock, and consumers are still spending, and that's what the banks will tell you, credit card companies will tell you, the retail sales numbers that we got most recently. People are still spending, and how long can that go on in a world where if gas prices were to go up a bunch more, that's taking otherwise spendable money out of people's pockets. But right now, we don't actually see much slowdown.
Special guest
in,
plus 5,000
certainly
Luca
none
coins
from
being
this,
given
but
away.
You think logically you will,
anybody who
because
wants them.
people have
I'll
a certain
show
amount of
you
money to spend.
why.
If they're spending 25% more on gas or something like that, then that's going to come out of other spending. But we don't see it yet.
One last thing. You mentioned those economies in Southeast Asia that are particularly dependent on petroleum. They make a lot of the stuff that American consumers buy. So was there any discussion today about whether or not those costs getting passed along to consumers is a real concern, and whether or not that might push up inflation?
So all of those things are in the models that we use to calculate inflation. So they're just parts. You can ask about anything like that, and they have a place. The staff has a place where they're looking at that and pricing in what will happen with higher prices and that kind of thing. So it's there. The effects are not that big yet. We're a huge economy. The import sector is only 10% of the economy, so we're not like a European country where 50% of the external of GDP is in the external sector. We're also, as I mentioned, we're an oil exporter, so we're not feeling the same kind of pain, and we're not likely to feel the same kind of pain that economies in Western Europe and certainly in Asia are feeling. Anyway, thank you very much, everyone. I won't see you next time.
For the last time, the chairman of the Federal Reserve, Jay Powell, wrapping up a very interesting news conference at the Federal...
There we go. A bit emotional there, wasn't it, really? Let's be honest. Sensei likes him. He thinks he's great. Right, we got a few minutes. We got a special event. We're going to give away lots and lots of coins for you now, which you can redeem for wonderful prizes. But to do all that, we need Sensei. Let's bring him on. Here he is, my mate Sensei. Sensei Crypto, how are you, mate?
Yeah, I'm doing well. What an emotional moment.
It was
Aren't we
actually.
going to miss Jerome Powell?
I felt it. It was very gracious the way he just left the stage and just said, I won't see you next time. Bit of Monty Python there. Bit of Monty Python. Good night. I won't see you next time. I wonder who spotted that.
I'm ready for the chat to demolish me and say, why do you miss him? No, I'm joking. I don't mind it. It's just an emotional moment. We've been covering him for 4 years?
I know. It's been the guy. Yeah. Oh, hang on. Let me just take off the alerts again. Yeah, we've been covering Jerome Powell now for a long time. Absolutely. We're just 5 away, folks, from 113,000. Now, listen here. 2 special events. 3, actually. 4, if you include Sensei calling in. I mean, it's a good event, isn't it? We're about to give away. Yeah, we're about to give away a fantastic thing, right? So stand by, 5,000 Luca coins, which you can trade for merchandise. You can trade for backstage passes. So Vaz is going to air shows, and he can take you with him, all sorts of stuff. All right. So click subscribe. You've got to be part of it. We've got 5 to go to 113,000. We're about to hit it in the next 5 minutes. Do that. And also consider subscribing. There you go. Pat me on the head. Go on then, Sensei. Pat me on the head. Hey, I'm like little Papa Powell there, aren't I? Lovely stuff. All right, okay. So what we're going to do in just a couple of seconds' time, we're going to go over to this. It is our Google earnings, and we're covering Amazon at the same time. So Vaz is going to broadcast the Amazon earnings on this channel. I'm going to do the Google earnings on this channel. You don't want to miss it. I give you great insights. I've got 10 amazing facts. And remember, I work for Google. I work for YouTube. I'm going to share some stuff tonight that you've never heard before. It's going to change the way you look at Google. All of that before the call begins. So I've got to be really quick because I've got an earnings call which I've got to be on time for. Google aren't going to wait for me, let's be honest. And what time do they start? I'm just going to just double check that. They start at... That's right. I'll have an hour to do all the facts. So join me for the Google earnings. This is the event coming up for you right. Oops. There you go. I thought I broke it then. Coming up right after this. This is the Google event. Ready to go. You like that? Google earnings live. 10 facts, big results, big moves. I've got the inside track for you because I work for Google and YouTube, of course. So join me in a minute. All that. But before we go there, I've got Sensei live with me, and we got 5 to go, by the way, until we hit 113,000. Today, you heard me read and Sensei also talk from the newsletter. And if you'd understood that, you could have traded that and understood exactly what that was all about. So we hope we enjoyed that. For those of you that didn't have the newsletter and you'd like to get it, we're giving you now, there's one person left who can get the newsletter for the 25% discount. Everybody in Discord, and we've got nearly 670 people in Discord. If you don't have the newsletter, you can go into the Discord channels that you all have access to, and you can get our best deal. Best deal ever. Always the best deal ever inside Discord for you as well, right? But anyone who does it in the next hour, and Sensei will tell me, we're going to give away 5,000 Luca coins, which you can play with in the gaming channel, have a lot of fun, and these are going to be redeemable for prizes, merchandise, all kinds of things we're going to give away to you with your Luca coins. Backstage passes, Vaz is doing, he's going in person to special events where they're going to be flying EVTOLs. You can go with him, all kinds of stuff like that. You might get special treats from the newsletter, special treats from me. I don't know. I'll send you a hat. I'll send you a hat or a t-shirt. All kinds of stuff. All right. And
I've got some XRP merch as well. We might start giving it that way.
That'd be good.
Official XRP merch from Brad Garlinghouse. It might be signed.
Ooh.
From Brad Garlinghouse.
Ooh. A signed Brad Garlinghouse t-shirt. XRP. Ooh. You may remember on their XRP event, we had all of it. Do you remember? We had the number one audience in the world, and everyone.
Welcome, guys! It's essentially us, the Martyn Lucas channel, giving away thousands of merch.
It was brilliant.
It was just us.
It was absolutely brilliant. That was. I love that. That was a complete mess up on their part. We just took all the prizes. Anyway, so you could get all that. Anyway, 5,000 Luca coins if you sign up. So Sensei, tell me all about the newsletter, because in about 5 minutes, I'm going to go over to the Discord. I'm going to go over to the Google earnings. So tell me what we can get from the newsletter, why you should get it. And don't forget, guys, if you get it right now, links in the chat, I will give you 5,000 coins because Sensei will tell me. Sensei, over to you, mate.
Yeah, of course. I'll tell you everything about the newsletter, and I'll just give you the rundown of what we just saw from Jerome Powell. So stay where you are. So the newsletter is something we started, I think, literally about a year ago, to take on all the news agencies that are biased, that are very expensive, and you have to cover all of them. And they weren't doing a great job, and we could tell that the mainstream media was just bought for and too political. So essentially, it started off with just replacing that. Your daily brief, the 5 things you need to know every day, the chart of the day, the technical analysis, the top stories you need to know, and the deep dives. And that's what it started off with. And that is such a fundamental part. But since then, we've added more and more and more. So what you get is the daily premium briefings, the deep dives. You get the macro event cheat sheet. So before any big macro event, like the Japanese interest rate decisions, like today's FOMC, like the interest and the inflation report we're going to get tomorrow, any of these macro events, you're going to get cheat sheets to know exactly what's going on, what levels to watch, and what to expect, and how it's going to go. You get the chart training course. So this is about 8 years of chart knowledge. Thousands are spent on chart courses. All the framework I use backed up by academic research, not just these random people that come on and tell you about all these different AI indicators which just don't work. And we give you premium access to my 3 indicators: Sensei's momentum band, Sensei's trigger alert, and Sensei's deep trend. All of these to help you win. So you get access to a chart training course, 4 hours. You can watch it, learn everything, the premium indicators, the £5,000 portfolio challenge, the portfolio tracker, which is essentially a net worth tracker and a forecaster for your finances, which is, I don't take any of the data. There's no ads, completely different to everyone else. People spend hundreds just on that, and we just provide it as an additional perk. You get access to a private section in the Discord community. So you unlock the full Discord section. If you're already a Discord subscriber, you get access to those extra events, those extra stage events, and those extra channels, and you also get one-on-one access to me. So all of those perks are bundled in. It started as just a daily briefing, which is probably still one of the most important parts of the newsletter, but you get all of those additional perks, and we're always adding perks. And again, once you pay, you're not going to get increase in prices. Other people that come on later, there is going to be price increases, and they'll continue to be, because we don't want too many people. But the people that subscribe now and the people that subscribed at the beginning, you're going to stick to the price you sign up for. So that's the great benefits of it. And I've got so obviously Martyn said you're going to get 5,000 coins, and as Martyn mentioned, we're going to have some great perks for those coin collectors as well. So the link is there. All you have to do is click on it. You can choose the annual plan, the monthly plan, whatever you prefer. Or if you're a Discord subscriber, go check the Unlock channel on Discord, because you can get a discount there as well. I do have some of the main points from the press conference as well, Martyn. Would you like me to go?
I would love you to share it. We'll start the Google earnings just in 5 minutes. Please carry on.
Okay. So let's go through the main points. So what we did get confirmed was Powell is staying on as governor. So we were wondering if he would or not. And after May the 15th, he is staying on as governor. Of course, he's not going to be chair. Kevin Walsh got voted in today. But Powell has confirmed today he's still going to be there. He's still going to be on the board. We will still get some speeches from him, but not as chair. But he is still going to be a voting member, essentially. So the reason he's doing this is he's tied it directly to the legal attacks on the Fed, and quote, saying it's been unprecedented in the last 113-year history. So he's very unhappy about the legal attacks, and he's essentially doing it as a protest. He's saying, I'm staying until these legal attacks stop. And he said, essentially, and this is a quote, the Fed independence is at risk. And if the Fed's independence is at risk, that is a major blow to the US, to central bank independence, to the markets. If they do become political, that's a major blow to the confidence in the US. So he is saying that is at risk, and that's why he's staying on. So he will stay, and again, quote, until it's well and truly over. So he could be here until 2028. That's the first point. The next point is, again, we saw this in the statement, we mentioned it, there's 4 dissents. That's the first time since the 1990s or something like that. It's 20 plus years we haven't had this many dissents. So first time since 1992. The only person who wanted a cut is Miran, and he's wanted a cut all the time. But now we've actually got Hamak, Kashkari, and Logan, who wanted the easing bias removed. It doesn't necessarily mean they want to hike, but they're saying we don't agree with the statement, so they are dissenting. This is, again, the most divided FOMC vote in 34 years. This is the most divided it's been in 34 years. Number 3, the easing bias barely survived. So right now in the statement, there is an easing bias saying that rate cuts are essentially what would be the next decision after many pauses. But Powell is essentially saying in June. So Powell said, and quote again, the center is moving towards a more neutral place. And on the bias surviving, he said, conceivably could come as soon as next meeting. So essentially saying in the next meeting, we won't have a bias of rate cuts next, potentially. And again, he said the language could change under Kevin Walsh. Number 4, no cuts could until two conditions are met. So he laid out two conditions until they would ever cut rates. And this is a direct quote again. He said, "We want to see the backside of," and he's saying the oil shock, "and the progress on tariffs before we even think about reducing rates." So there's two prerequisites, and that is the end of the oil shock and the end of the tariffs. And neither of them are essentially any very close. So don't expect rate cuts at all. Maybe Kevin Walsh can convince everyone, but I don't even think Kevin Walsh is going to look to cut rates. So if anyone's here very excited about Jerome Powell leaving and thinks we're going to go cut rates and crypto's going to go to the moon under Kevin Walsh, I don't think Kevin Walsh is going to be interested in cutting rates either. Number 5, inflation is moving the wrong way. So Powell confirmed that that headline PCE is at 3.5%, core PCE is at 3.2%. We're going to get even more inflation data tomorrow. So join me for the return of the morning forecast show tomorrow with the inflation data because we're going to get more inflation data tomorrow. And essentially saying inflation is moving the wrong way. And he said near-term inflation expectations have risen this year. And finally, policy at high end of neutral, perhaps mildly restrictive. Powell sees current rates as close to neutral, not aggressively tight. So that, again, that removes the cushion for cuts. So we're moving away from cuts. People want the language to be more neutral. People are saying rate hikes should be back on the table. Powell is staying and inflation's moving the wrong way. So whether it's Jerome Powell, which is not, it's Kevin Walsh, I don't think we're going to get best case scenario, probably one rate cut, and then worst case scenario, rate hike, and most likely scenario, we're probably going to hold where we're at. So there it is. Jerome Powell's last press conference. Very emotional.
I know it was. Ever since we started this channel, it's been Jerome Powell, and it'll be very different next time. So thank you, Sensei, for your analysis today. Thanks for taking the time out from being your full-time dad, of course you are now, and for helping us out here on the show. It's been absolutely great today. I wonder if we just hit the 113,000. We are 4 away. There you go. About to hit 114,000. Everyone tap the like button, subscribe, and we'll hit 113,000 before we go. But it is now time to go over to Google earnings. Now, tonight we are doing 2 earnings at the same time. I am covering Google earnings with 10 facts, as I do work for YouTube and Google, so I have lots of information to share with you. So you'll look at Google in a very different way. I've just made a lot of money from Google. I understand the business very well. I see when ads revenue's going up, as does Sensei. We've got a good insight to it all. So I'm going to cover Google earnings, and then in about half an hour, in about 20 minutes, on the same channel at the same time, Amazon will be covered by Vaz. So you might want to pop it in and out of each one, and at the end we'll send you to that so you can get both. Amazon will come to Google, Google will to Amazon, so you can see both and learn all about those businesses tonight. Vaz will be presenting from the analyst room, lots of information around Amazon before the earnings. I'll be presenting my 10 facts with you, and I'm all ready to go. This is a little taster of what's coming up. These are all my breakdowns of Google earnings tonight. I've got all the information for you, and all you've got to do is stay where you are. It's also pinned to the top, so you just click on the link and it will take you there automatically. It's going to be a fun night. I hope you'll enjoy it. Google Insights, so you can successfully trade and make money with Google. But we're now going to wrap up. That's it from me. Stay right where you are. It'll take you automatically to the Google earnings. If you do sign up for the newsletter tonight, remember that the links are all below in the chat. Also, they're in the chat for you as well, below in the description. Sorry. Sensei will let me know if you did it today, and I will make sure you get 5,000 Luca coins in Discord. All right, that's it, which you can then trade up for great prizes in the future. All right, everybody good? Everybody happy? Did we answer every question? I think we did. Sensei, once again, thank you for tuning in. Love to your dear wife and your lovely little boy there. And thank you for being here once again, mate. Cheers.
Thank you very much.
So we'll wrap up the show right now, the way we always do. We'll send you over to Google. So that's it from me and Sensei. Stay right where you are. Click on the link. Tomorrow is a big day. The 60 Minutes interview. No opening bell. No closing bell. One major event tomorrow. You want to find out, have I really beaten the market for 3 years? Have I really beaten Warren Buffett? Have I really beaten all the hedge funds and the S&P? The answer is yeah. But tomorrow I lay myself open and bare for a full full investigation using the technicals, using the charts, interviewed in a way never been seen before. I've never agreed to do an interview. I'm doing it unedited, unscripted. Join me tomorrow. It's going to happen live. You can watch it, see how it unfolds. I'm quietly confident I have, but you never know. I'm going to be checked. Oh, God, what have I agreed to? That's it from me. Until next time, stay right where you are. Until next time, as always, take care of yourselves.
And each other.
Bye-bye for now. Google earnings, Amazon, right now.